Most people think annual report is just a boring stack of numbers. They are dead wrong. This 100-page document is actually a gold mine, a coded message that reveals the CEO's true strategy, the biggest threats facing the company, and whether the stock is buy or a bust. The biggest mistake only looking at the income statement and the bottom line. That's just a PR version of the story. Today I am showing you the three hidden sections that smartest investors like Warren Buffett read first. We are uncovering the secrets of annual report. So most people read annual report and look only at the profit and revenues. But smart investors analyze and look beyond the numbers. So the secret behind annual reports of IT companies like TCS, Infosys, HCL, how they reveal the much more than what the CEOs say. Yes, the hidden secrets in the annual report. So what is annual report? Annual report is company's official document that summarizes the performance for the year and the key achievements and challenges of the company and management strategy and the corporate governance risk and sustainability updates, and is very important for all the stakeholders, regulators, government and public and investors, right? Published once a year for all 4 quarters, 12 months, together all the revenue, profit, margins, performance, achievements, governance, risk, everything is there in summary table. So the section starts basically with the chairman's and CEO letter. This section gives the visionary overview how the company performed and where it's headed. For example, TCS CEO highlighted digital transformation growth and large deal wins. And while Infosys emphasizes AI and cloud adoption. So how they performed during the year and how they want to perform in the future also they can highlight. So second section is management discussion and analysis, MD&A, and here they disclose the global trend and the client demand and technology shifts and management performance at various segment levels like banking, retail, healthcare, etc., and risks like attrition, currency fluctuation, or global slowdown. So, how management overall view and what their opinion and upcoming trends and what they want to showcase, they clearly describe all these MD&A. For example, Infosys talks about generative AI projects are reshaping client contracts. HCL emphasizes its on engineering and cloud services business. The third section and most important section for everyone is financial statements. Business at the end of the day is a numbers game. So what is your revenue? How much you have the profit? What are your balance sheet items? How much cash you have? Cash is one of the most realistic set of the company and key metrics to analyze for IT companies. Key metrics to analyze for IT companies, especially the revenue growth. So top line growth from services, TCS year on year, just like 10% they announced. The operating margin, efficiency of the operations, Infosys 21%, attrition rate, employee turnover 14%, and EPS, profit per share, 58 rupees per share. So this will give the analysis of the company, how it is performing, and what they declared for the quarter or for the entire year, 4 quarters together. And the thoughts fourth section is segment and geographical analysis. Shows which service line and regions drive the growth, whether it's a banking sector, financial sector, or insurance sector. What are the top customers delivered? whether it's a revenue of 30%, 40% of the revenue, or North America major revenue source 50%, the cloud and the AI digital transformation fast growing segments. And the last and most important thing here is corporate governance. How you give back to the society. You have taken so much from the society, how the company, the legal entity, you are going to give back to the society. So they detail board composition, committees, and ethical conducts, and the top IT companies stress transparency and environment, social governance (ESG), and sustainability initiatives. They include all these in governance report. And examples, if you want to take, Infosys carbon neutral since 2020, TCS invest heavily in the education and digital literacy programs, and HCL focus on green energy and initiatives hiring, inclusive hirings. How investors, analysts use it. So compare the profit margin and deal pipeline across the companies, and employees cost, which is close to 60 to 70% of the P&L, and attrition of human resource and the capital of the company, and utilization rate where there is a zero bench and less bench and more utilization of the resources, which will be more optimization of the cost, and identifying the emerging technologies and R&D investments, especially whether it is a realistic or any kind of projects they are making, and how much they are really investing. All those things will be included here. And understand the dividend policies. The dividend is the main important policy for the company, and how they are maintaining, how they are declaring, what about the approvals, and what they have really the cash reserves. Out of that, how much they are declaring the dividend. All these things will be analyzed here. Key insights from 2024 annual reports. This year's revenue would have 40,000 crores, growth rate 6%. Key focus areas AI, cloud, and large win deals. And Infosys 1,55,000 crores, 5% growth revenue and generative AI cost optimization. HCR 1,10,000, 7% growth. Engineering services, Wipro 90,000, 3% growth rate, and digital transformation. So CEO's letter is not just a motivation, and it's a market signaling. Here, what we need to observe carefully in terms of their speeches, their messages, their declarations to the press, and in the reports. So, if they emphasize cost optimization, it may mean margins are under pressure. So, if you want to improve the margins and maintain the margins, and they do the last cost optimization, they use the word called cost optimization more. And the second one is, if they highlight people first culture, this may signal high attrition or HR issues. Will display the clear understanding of that and focus on tone, emphasis, the main optimistic and cautious or defensive. It reflects the real internal structure and mood of the company. For example, 2024 Infosys letter shifted from growth to resilience, hinting at a slower deal momentum. Note to accounts, where the real story lies is note to accounts, reveals that headline aside, and deferred revenue equal to upcoming revenue and good for future cash flows, and sudden increase in the provisions, possible project delays or disputes. If they highlight other income, if other income is very high, not from the IT services, maybe from investments or forex gains. Always check if profit growth comes from operations or other income. So from the operations means it is the realistic one. From other income means we need to see what is the future structure of the company and future expectations of the revenue and the margins. Employee data, the hidden KPIs. IT companies' biggest assets are the talent and resources. So look at attrition rate, rising attrition, culture or compensation issues, utilization rate, drops means bench strength increasing equal to slowdown in the projects, and average revenue per employee, powerful efficiency indicator. So when you need to observe these things and compare this one year on year and how it is increasing, whether it is making the sense for super growth or slowdown of the growth or negative growth. For example, TCS maintains the lower attrition, higher revenue per employee, then it's a competitive edge. Cash flow statement, most honest section. This is the realistic strength of the company. So the income statement can be beautified, cash flow cannot, because the positive profits but negative cash flow equal to cash trapped in receivables. That may have to, you have a reserve, you have the revenue, but you are not collecting the revenue. Your bank account shows that one very less amount. That means you stuck, your debtors are increasing, your cash bank balance is not increasing. That is where there is a problem. Large capital expenditure, investment in future capability, good sign. And watch for dividends paid or versus cash reserves, shows shareholders return mindset. Segment reporting reveals the future bets. IT companies show revenue by vertical, like business, banking, financial service sectors, and retail, manufacturing are regions wise. US region, Europe region, APAC region, Middle East, and a sudden surge in one segment shows they were investing, and decline in other indicates global headwinds. Infosys heavily depends on North America, makes it more sensitive to US spending cuts, right? For example, Infosys is investing more in America. If something suddenly Trump policy comes or some other Trump declaration comes, most affected by US region. So need to understand all IT companies there is a more dependency on US compared to uh, Europe and other regions. There is anything happens to US in terms of the policy, economy, tariffs, etc., first impacted by software companies. So we need to observe the time to time policies. So they need to leverage their investments in all the regions in order to make sure that when their business goes run, if one geography or one region impacts them, other region should automatically balance the impact. So that they have to spread their business overall the region, overall the globe. So Infosys is doing 70 countries business, and the TCS is doing 80 country business in the 80 countries. How they are coping with the global policies, how it will influence their exchange rate and fluctuations. So whether they are doing the proper hedging of all their foreign reserves or not. This we need to observe clearly in the report. And auditors report often ignored but critical emphasis of matter, warning flag. Auditors reports clearly says that frequent auditors change, then it is a red alert. Delay in submission, possible financial control issues. We need to observe clearly the auditor's reports as well. And ESG and CSR section and moderate investment signals. And companies manage reputation, ethics, and sustainability. The more ESG focus is more stable and global contracts. And diversify record risk of losing the global clients. It's an edge with the global sustainability investments or investors. Infosys early carbon neutrality gives it. Risk management section. Companies fear in writing. Every company lists risks, but order of risk matters. Currency fluctuation comes first, and export exposure is high. If attrition risk tops the list, HR stability is the concern. If AI dispersion appears for the first time, it's a strategic shift alert. Dividend policy is silent indicators of confidence. Rising the dividend, management confident about the future cash flows. Flat or falling, conserving cash, maybe expecting tougher quarters so that they are maintaining the buffer in order to meet the unexpected, unfortunate, and unexpected future any events or situations. So TCS concedes dividend show strong confidence and liquidity. Comparing year on year language is very important because don't just look at the numbers and compare the words and languages and phrases they used last year and this year. Replacing strong growth with stable growth always indicates that there is a slowdown in the growth. New terms like AI first or cost rationalism indicates internal alignment. The real secret of an annual report is not in the balance sheet, my friend, but in the footnotes, language, and the hidden patterns, what they indicated that reflects the real annual report. Once you start reading between the lines, you will think like a professional analyst, not just a reader, right? Sometimes there will be more indications in the report, and we need to analyze all those segments. So, do management explanation numbers match or do they contradict? Footnotes. The most surprising disclosures like lawful suits, new debts, or off balance sheet items are often buried in the notes. Read between the lines. Are there changes in the accounting policies, key staff, or major jump drop in numbers? Investigate further. Intentional simplicity. The best managed companies make strategy and results clear even in complex reports. And companies now explain their environment, social responsibility, and governance efforts. And genuine progress is shown with numbers, not just glossy stories. Great annual report disclose the real world challenges, not just boilerplate risk list. Watch for emerging risks like a tech, regulatory, global, and concentration on single customer are obtaining the more customers and the deals in pipeline, how many deals they are winning, how what is the retention percentage of the clients, and what is the revenue they are getting from the clients retention. This is very important. At the same time, all the sections, CEO section, business sections, and management discussion section need to review the important points highlighted there.